is Mommy Belluga Investing.
Hi there, back again with me Rati in Mommy Belluga Investing. In this video, I'm going to analyze Tai Sin Electric Limited with stock symbol SGX 500 and traded in SGX mainboard since 2005. I found this company on Daddy's Belluga portfolio, my husband's portfolio, and I'm quite curious about it. My quick take for Taisin are, first, it is one of the companies that has financial year not ended in December. 2, the business is highly related to construction industry. 3, it is not a growing company, especially with declining earning for the last 5 years. It is not a high paying dividend as well. Hence, I don't have any plan to make position on Taisin yet for now. Okay, how did I reach the above conclusion? Follow my video as I quickly discuss the company's profile, EPS since 2010, dividend and other numbers. Please consider to subscribe because it means a lot for a beginning YouTuber like me. If you have any comments or input, do not hesitate to put in comment section. It'll probably help me to get more perspectives and learn more. Okay, before getting into the data, I read out the disclaimer first. Disclaimer, this is an amateur video. My main intention is to record my journey, learning and practicing investing from scratch. Over time, you may find some inconsistencies in my analysis and conclusion. Please bear with me. My analysis is limited to the public data that I can access and the scope of my knowledge. Both of those change over time. This video shouldn't replace any financial advice and neither suggestion to take position, buy or sell in the stock market. Please conduct your own research before making any decision. But if you do your own research, I hope this video could be useful somehow. Now let's start from a brief company's profile. Tai Sin Electric Limited was established with the foresight and determination as cable manufacturing business in 1980. This company has been traded in SGX mainboard since 2005. Currently, Taisin structure into 4 interlinked business segments. They are, the first one is Cable and Wire, or C&W in short. This segment designs, develops, manufactures and trades electrical power distribution products. Products include power control, instrumentation and fire resistant, and flame retardant cables and busbar trunking systems, which are all used in all areas of electrical instrumentation installation for commercial, residential, industrial, and infrastructure projects. The second segment is Electrical and Material Distribution, in short EMD. The segment supplies products and services to a wide range of industries, which includes industrial automation and maintenance, repair and operation or MRO. Products include industrial control system and components sensing, measurement and monitoring system, power quality system, safety, cabling and electrical accessories as well as lighting, and energy monitoring solution. The third segment is Switchboard, or in short SB. The segment designs and manufactures high-quality switchgears for use in large buildings, industrial installation. Product includes low-voltage main and sub-switchboards, distribution boards, and control panels, amongst others. The last one, or the fourth one, is Test and Inspection, or T&I. The segment provides a comprehensive accredited testing service for materials ranging from concrete to soil and asphalt premixes. Service includes independent testing, inspection, and certification that meets local and international standards. In terms of ownership, the 2020 annual report listed the current chairman as the third largest shareholder with 6.61% of ownership, with the largest shareholder is the company's CEO with 16.21%. Okay, so that's a brief overview of the company. Now let's take a look at the company's performance. So here I plotted the earnings per share since 2011. I also added a horizontal green dash line as a guide to zero level. Earning below this line indicates that the company is recording a loss for that particular year. Quickly, we can see that Taisin had not been recording any loss in the last 10 years. That's good. There are a few dips and declines that are worthy to look into. The first one was in 2015. The second was the declining earning from 2017 to 2020. The 2017 financial report indicates that the lower revenue across all the business segments. Several projects were completed in 2017 financial year, that there were not much sales were made as not many new projects were started. The 2018 annual report again reported a mixed result among the business segments, with the net results decrease in earnings. The cable and wire segment reported higher delivery and revenue. However, it also incurred higher costs due to the higher copper price and stiff competition. In the end, it results in lower profit. Furthermore, slower in economic condition in Malaysia and project delays in Vietnam contributed to Taisin's profitability drop for their overseas operation. Similar trends were also noted for their other three segments, that was lower profitability. In 2019, Taisin reported revenue growth in their cable and wire segment, test and inspection, but there were decline in electrical and material distribution and also switchboard segment. The net result was still declining in profitability, contributed by stiffer competition and surge in copper price. In this year, Taisin also started the company transformation for the Industry 4.0. I'm not clear about the details of this transformation though. Okay, the profits still declining in 2020. Yeah, finally sign of probable recovery happened in 2021. The company's chairman noted that the group resilience despite prolonged COVID-19 pandemic. In their 2021 report, it marked the company's third year of transformation effort. Their transformation effort seems to be starting to show some results, as Taisin's business arms able to operate efficiently at lower capacity, at the same time maintaining the social distance operation. 2021 operation improved by increased sales in their cable and wire segments and coupled with some increase in copper price. The copper price hike was noted to benefit Taisin, which is not always the case. Okay, so that was a brief info about Taisin's profitability. Now let's take a look at the perks as the shareholders. That is the dividend. Okay, to see the sensibility of dividend payout, so here I plotted 3 layers of information. The first one is the dividend payout itself over the last 11 years, which are plotted as red round markers connected by a thick red line, as we can see on the screen. On each of the points, I have annotated with 2 numbers. The number above the markers are the dividend payouts in Singapore dollars, and the one below are the payout ratios to the respective year's earning per share. As a comparison to the earnings, here I plotted back the earnings per share as a thinner line with the same color. Quickly, we can see that Taisin's dividend payout is pretty sensible. Firstly, it paid less than their earnings. The maximum payout was in 2019, where it paid 83% of their earnings as dividend. From 2010 to 2019, the dividend dollars amount was always almost constant. The range was between 2.1 to 2.4 cents, where the payout ratio ranged between 49 to 63%. Even with a dip in 2015, there were a big enough buffer to maintain the dividend. Due to the decrease in earnings since 2017, Taisin's dividend was decreased in 2019 through 2021. Okay, I kind of like this kind of company when we are talking about dividend payout. Yeah, it feels a responsible thing to do, to give payout not more than its earnings. Okay, now over the last couple of videos, I've been adding 2 more information layer to see the financial situation of the company. Okay, those information are that we're going to see on the next screen. Okay, the cash and cash equivalent position as purple bars. In general, there was nothing unusual. Yeah, if we look at the screen, the graph on the screen, there was nothing unusual or striking in Taisin's cash situation for the past 10 years. The cash peaked in 2016, which then declined through 2018 and 2019 and have been increasing for the last 2 years. Another layer is current liabilities position, which is liability that have to be fulfilled within 12 months. The constant trend for Taisin here that the current liabilities are always higher than the cash and cash equivalents. I haven't been digging further for how the company operates with such financial position. The one thing that came to my mind is that the company have to frequently refinancing when the cash and cash equivalents are insufficient to cover the current liabilities. Okay, yeah, so that's my review for Taisin's dividend sensibility. Now let's take a look at how attractive this dividend as compared to the market valuation. Okay, let's look at the dividend yield history. This is what a dividend hunter may be waiting so far. Yeah? Dividend yield history. Here I plotted the average dividend yield per year as the round markers. At each markers, I place an error bar which represents the range of yields over that year. The variation in a year is caused by the volatility level of the share price. The yield increase if the share price decrease and vice versa. We can see that the dividend yields over the year have been in constant decrease so far. Yeah, in general, decrease in dividend yield mainly contributed by two factors. The first one, the decrease in dividend dollar amount, and the second one is the appreciation in share price. Now we know that the dividend dollar amount was almost constant from 2010 to 2018, so the dividend yield decrease in those periods were mainly contributed by share price appreciation. It was a juicy 16% in 2010 and down to 7% in 2018. And today's measure, 7%, is already super high dividend payout. The yield then decreased since 2019 through 2021, contributed by both decrease in earnings as well as share price appreciation. Even that 2% yield in 2021 is higher than bank deposit. Okay, probably slightly interesting. Okay, and next let's see Taisin's market valuation. To see Taisin's market valuation, as usual, here I plotted 4 layers of information. They are: the first one is the price, which represents market valuation of the company. It is also the easiest information that I can obtain. Okay, but price alone is sometimes misleading for the value of the company and its prospect, as we all know. So I include some fundamental indicators to help me to decide. The second layer of information is the 10 times earning multiplier, which here I plotted as a dashed green line. 10 times earning multiplier can be considered as the price where price to earning, that is the PE ratio, is 10. For me, I consider in general 10 times earning multiplier has two purposes. First, it indicates the price where I have higher chance to break even within 10 years. You can plot 5 times earning multiplier if your investment horizon is 5 years. Second, as a consequence for the first reason, I'll consider share price above 10 times earning multiplier to be expensive. The third layer of information is 15 times earning multiplier. With the same principle as the 10 times earning multiplier, price above this indicator will be deemed as expensive. Here I plotted the 50 times earning multiplier as a dashed yellow line, just like the traffic light. I'll start feeling nervous, uncomfortable if the price crosses this line, particularly for non-growth company. The fourth layer of information is the 20 times earning multiplier. Here I plotted as a dashed red line. I will consider the share price to be super expensive if it ever crosses this line. For non-growth company, I consider to cut down my position if this happens. Okay, so now let's see what's going on with Taisin's share price. From the fundamental indicator here, Taisin has been historically undervalued, if we see on the screen. The price was constantly lower than PE 10, till 2019. The one thing that contributes to become rather overvalued is that the earnings have been in decreasing trend. On the other hand, the market seems to have high confidence in Taisin. Interesting enough, that the share price haven't been much impacted during the period of declining profitability. That was from 2017 to 2019. The share price has been on uptrend since 2020, which was also supported by increase in earnings. Market seems to be quite optimistic of Taisin's profitability outlook. Okay, let's say that if I'm interested in Taisin, yeah, what is my reasonable price for this company? Okay, so here I place again a notation in dollar amount for each of the earning multiply. PE10 placed Taisin valuation at 40 cents or $0.4. As of 5 November 2021, when this video was prepared, Taisin share price is in 38 cents per share. At this price, it is slightly undervalued. On the other hand, considering the Taisin's share price that hardly went beyond 10 earning multiply, it is kind of hard to say how much upswing Taisin can cover. This prediction is highly speculative and I have been wrong before. So it'll be very useful to see how much were the support level historically. To do that, I'll add another fundamental indicator, that's the 5 times earning multiply. Okay, so here I'll place the 5 times earning multiply. We can see that up to 2016, Taisin's support level were at 5 times earning multiply. It was then slightly raised since 2017. So again, there seems to be a new confidence in Taisin's future growth. So for today, I'll stick with 40 cents per share, reasonable price. Yeah. Okay, so in conclusion for Taisin, okay, the first one for me is it's not a growing company, especially with declining earnings for the last 5 years. It is not a high-paying dividend company as well. Unfortunately, for me now, I don't have any plan to make any position on Taisin yet. Okay, that's all for today. Thanks for watching. Don't forget to leave comments, and if this video is useful for you, please subscribe to my channel. It's free for you to do so, and it means a lot for a beginning YouTuber like me. I'll see you again in my next video. Bye!